So we've got four big things affecting silver this morning, and I'm sure you've probably heard about all of them, but the first one is obviously the potential war in the Middle East with Iran. If it happens, I do think it's going to be more severe, more prolonged, and more costly what we've been conditioned to lately, say with the situation in Venezuela, where we kind of went in overnight, secret weapons and got Maduro out of there, and by the time it hit the media, it was all over with. And then, of course, prior to that, there was the other strike against Iran that seemed to happen overnight, and by the time we heard about it, it was all done with no loss of life reported. So I think we've kind of been preconditioned to think, okay, these things are just going to happen without any situation. This situation is a lot different. This isn't the Houthis in the Red Sea, where honestly we had trouble there also kind of stopping that. There were different factors there. But this is no joke, and I hope it can be resolved peacefully. But if it does spring up, that's going to be higher silver prices. So we don't want that. We want peace, but there's definitely going to be a run to safe haven assets like silver if that goes down. In addition to that, we got the March open interest, which we've been talking about. That is stabilizing a little bit. Stabilizing is not really the right word. It's still very stressed, but it does look like there's a lot of rolling into May and other months. So it looks like inventory will be stressed. It's still about 88 million today. By the time February 27th hits, it'll probably be down, somewhere in the 30 to 50 million, area. And that's happened before, but it's still a stressful situation. And when you combine all these other global factors that we didn't have in the past, then it's a stressful situation to say the least. The other thing is the Supreme Court decision on tariffs. Probably, if I had to guess, I would say that's probably going to go against the tariffs, even though the Trump administration said there's going to be other routes they're going to go to make sure those happen, so that can only be probably temporary pressure. Shanghai physical is still closed until next week, so when that opens up, COMEX silver spot will be kind of chasing that premium again, but right now it's not. So those are kind of the main factors that's driving silver price right now, and by far, the major gravitational force is the potential war. And honestly, that can go either way. Any of these can go either way. But again, if you're stacking silver, you keeping your solid miners. Hey, this is all about surviving the middle on that road to a higher price reality. But I broke that down in this video, so let's take a look.
Silver is sitting in the middle of a powder keg. Not one catalyst, not one headline. Four major forces, all active at the same time. War risk in the Middle East. March COMEX open interest still under structural stress. A Supreme Court tariffs decision window. And Shanghai physical reopening next week. This is not a calm market. It is a compressed one. Let's start with the biggest gravitational force. If kinetic military action breaks out in the Middle East, silver becomes a safe haven reflex. Oil rises, inflation expectations shift, volatility expands, capital moves fast. And here's the part that matters. We have been conditioned to expect short, contained military events, quick strikes, quick resolution, limited fallout. The probability of a prolonged, costly, destabilizing conflict is higher than what markets are pricing right now. That risk is not fully embedded in silver. If escalation becomes severe and extended, silver does not drift higher. It reprices in steps. If instead we get a negotiated deal, silver can dip sharply as the volatility premium collapses. And to be clear, nobody wants loss of life or broken families. Peace is always the better outcome. This is analysis of market reaction, not endorsement of conflict. Now March open interest. This is still a COMEX under stress, but not panic. Stress is being rolled forward. It is not detonating. Registered could fall into the 40 to 50 million ounce range. That is stress. It is not devastating historically, but it would be happening under global instability, geopolitical tension, tariff uncertainty. and a physical market that has not relaxed. That combination is the wild card. Next, the Supreme Court tariffs decision. If tariffs are deemed unconstitutional, the immediate reaction could be dollar strength and temporary downward pressure on silver in isolation. But we are not in isolation. The administration has signaled it will pursue tariffs by other mechanisms if blocked, so any downward vacuum move is likely temporary unless broader conditions change. And then Shanghai. Shanghai Physical has been offline. When it reopens next week, the question becomes simple. Does COMEX paper move toward Shanghai Physical Premium? If Shanghai Premium holds firm, volatility increases. If it collapses, pressure releases temporarily. This is a confirmation moment. Now layer in the sub-factors. State of the Nation Tuesday. Olympics concluding. Primaries beginning in March. Political cycles amplify volatility, especially under wartime narratives. Historically, administrations at war often retain power. If political control shifts, lame duck dynamics begin. All of this feeds volatility. But here is the core silver forecast stance. A war is not required for higher silver prices. The structure pushing silver toward a higher price reality has not changed. Industrial demand remains strong. Monetary pressure remains present. Supply remains constrained. We are surviving the middle. Physical silver and solid mining equities remain the foundation position. Options in this environment are closer to speculation. Volatility can break either direction fast. The market is not choosing a direction yet. It is compressing inside multiple live trigger points. The next decisive move will not be random. It will be driven by which force ignites first. Silver forecast be back with the next update.